Welcome back to Crypto Meets AI. Gary here with an update for you. Do me a favor, friends. Smash that like button, hit subscribe, and comment down below. Now let's get into this. I love seeing everything we've talked about over the last few years coming to fruition. Tether, without having conducted any reliable audits, will end up declaring itself insolvent. MicroStrategy will be forced to sell its Bitcoin reserves. The Japanese carry trade will eventually explode. The biggest liquidity crisis in history will take place, and XRP will be the solution. Just in case anyone's forgot, Ripple's been preparing for this for the last decade.
There's so much conversation going on about AI and how AI is going to be reshaping the world. There's not enough conversation about how technology is going to be reshaping the financial services area too, and the need for democratization. As Secretary Besson talked about the democratization of investing in America. There are slews of middlemen in the whole financial services area. We have elongated settlements, elongated processes. If we could digitize every asset, so if we could digitize all stocks and bonds and have it more seamless going from a digital wallet of cash or stable coin into equities or bonds through, in most categories, through an ETF, it will reduce the friction costs, the transaction costs, and it allows a much more free flow. So there's $4.1 trillion of money in digital wallets globally, sitting in stable coins mostly. And can you now, and right now, if they wanted to go into a bond or stock or have a real estate transaction, they have to take the money out of the digital wallet into a traditional wallet. And have all those commissions and fees and all that stuff. So the whole idea of tokenization of all assets, including real estate ultimately, is to just reduce huge friction costs, making investing easier, simpler. You could, as the Secretary was talking about this one account, you can do this all through your app, and it's going to allow a more, I would say, a free-flowing process of investing.
We all know there's no chance in hell Larry Fink didn't know about XRP and what XRP solves. Not in this world, not in my lifetime. Larry Fink knew exactly what XRP and Ripple were trying to do. And everything he talked about right there, I honestly believe he's talking about XRP. If this isn't bullish, I don't know what is. XRP gets the first ever CFTC regulated spot listing in the U.S. Nominal has officially launched the first CFTC regulated U.S. spot crypto exchange, and XRP is listed on day one. This means XRP can now be traded spot plus futures plus perps plus options under federal U.S. regulator, something no other U.S. exchange has offered to date. XRP is now approved as trading collateral. You can literally post XRP and RLUSD as margin the same way institutions use treasuries or stablecoins. That's a huge legitimacy upgrade. XRP just moved from crypto token to U.S. regulated market infrastructure. This is the biggest regulatory unlock XRP has had in years. SEC Chair Paul Atkins just told CNBC that the innovation exemption for crypto firms will be rolled out in January. This changes everything. Perfect timing for XRP.
And do you think that can happen before the end of the year?
Well, we'll see. We're working with Congress and we're providing what we call technical assistance to them regarding legislation to make sure that, they're staying on, what makes sense and that meshes with other laws and whatnot. But we'll see. I can't prognosticate that, but we have enough authority to drive forward. I'm looking forward to having an innovation exemption that we've been talking about now. We'll be able to get that out in a month or so is what I'm hoping. We were impeded a bit by the government shutdown. Obviously, we couldn't work on things during that time, but we're on track and we will be able to forge forward with the crypto area and make sure that we are able to embrace this new area of innovation that for too long the United States basically is just pushed back against.
It's starting to unfold, my friends. Japan just broke the global financial system. Japan's 10-year yield, 1.92%, highest since July 2007. In 2019, this number was negative 0.28. That is a 220 basis point reversal, the largest bond repricing in modern Japanese history. The anchor under 500 trillion in global derivatives just snapped. But here's what no one is telling you. Japan is raising rates into 135 billion stimulus package. Read that again. Japan is raising rates into 135 billion stimulus package. No sovereign in history has ever attempted this. Tightening monetary policy while exploding fiscal policy into 255% debt to GDP. This is not central banking. This is a nation choosing the method of its own collapse. The mathematics are now irreversible. Every 100 basis point yield increase costs Japan 2.8 trillion yen annually. Debt service already consumes 23% of tax revenue. The system breaks above 4%. They are already halfway there. But Japan's crisis is your crisis. $20 trillion in global investments were funded by borrowing yen at zero. Hedge funds, pension funds, sovereign wealth funds, the largest leverage trade in human history, built on one assumption: Japan rates stay frozen forever. That assumption died this week. When the world's largest creditor nation becomes a forced seller of $3 trillion in foreign assets, there is no bid. Markets don't correct, they gap. The Bank of Japan is not deciding whether Japan breaks. They're deciding when everyone else does. Your portfolio was constructed in a world that no longer exists. The zero rate era funded every bubble. The carry trade financed every rally. The BOJ backstopped every assumption. That world ended on a chart nobody was watching, until now. Regulators are calling tokenization inevitable. We need to be embracing it to keep the United States at the forefront. Paul Atkins, chairman of the SEC, continues to emphasize that the future of finance is on-chain.
Do you expect this is where financial services is going? Are the major banks and the brokers out there today moving increasingly toward tokenization?
Oh, absolutely. And it's the way the world will be, here in that, I mean, maybe not even in 10 years, maybe even a lot less time, maybe a couple of years from now. So I think that all of this modernization of the markets, I think, is good. And the trouble that we've seen here over the past few years is that the SEC, unlike historically, it never was necessarily at the vanguard of pushing new innovations. It was always a little bit behind the market, of course. But here recently, it's been almost standing athwart the marketplace, and as it's as all these new innovations were coming about. So that's no more. We're actually embracing it, and I believe that we need to be embracing it to keep the United States at the forefront.
He's absolutely right. If we don't lead the crypto race, someone else will, that's for damn sure. And I'm sure we wouldn't like who does it, because it'd probably be China. ETF day end update. XRP ETFs close at 35 million today. Another strong day, 34.7 million in total volume, with Franklin Templeton once again leading the pack at nearly 12 million. Wise followed with just under 10 million, and the rest of the lineup stayed steady. No big drops, no volatility spikes, just consistent institutional flow all day. If this is what normal looks like now, the next leg up is going to be very interesting. This is going to be huge for XRP. Smart accounts are next. Zaman Wallets holds around 4 billion XRP, which is worth approximately 9 billion. The Zaman Flare solution will enable direct access from Zaman to stake on Firefly. No bridging, no other apps, right on the XRP ledger itself. Bullish.
I think, the total addressable market for XRP staking is the total value of XRP. I don't see a reason why you wouldn't want to stake, all the XRP in existence. There's no reason not to get yield on it. That said, I think a reasonable expectation is what I said before, which is, I genuinely think we could get to 5 billion by the middle of 2026 with a good tailwind, of course. For instance, we are working with Zaman, which is one of the major wallets on the XRP ledger, to create a smart account that enables you to stake directly from XRP ledger into Firelight on Flare without you having to touch the bridge. You don't have to interact with the bridge. You can just stake directly through what we call a smart account through Zaman, and that's in progress. And Zaman has, as I understand it, roughly 4 billion XRP. So, that's about $12 billion, just that. And I think, there's no reason that we wouldn't be able to pick up a reasonable amount of the assets that are used in Zaman. The appetite is very, very high because, everyone out there wants to hold on to their XRP holders. You're talking about multiple billions sitting at exchanges. They do not want to lose that business. And so they want to work with people that help them retain those users of that exchange.
This is the exact type of thing I've been talking about. We won't have to sell our XRP. You will be able to earn yield from it and in turn have passive income. Well, that's what I have for you folks. Until next time, stay savvy, stay stacking, and I'll catch you in the next one. If you enjoyed this, smash that like button, hit subscribe, and comment down below. And if you want more crypto deep dives, check out our videos right here on Crypto Meets AI. Thank you for watching. Remember, always do your own research. This is not financial advice.